Hey guys, it's Max Convexity. Hope everyone's having a great day today. Today we're going to do the end of the month wrap up. We're going to look at the buffer report, and I'm going to pick a fund of the month. How does that sound? Let's look first at the charts real quick, and let's look back at the month. Here's daily charts. We'll just start at the top. We'll just start here at the top. Here's a daily chart of the NASDAQ. That goes back till, that's just April. So here is S&P. You can see both the NASDAQ and the S&P have been stuck underneath the 20 EMA. 2 days ago, we rallied back up to it and then fell today. We fell yesterday by the time you guys are seeing this. All right, here's Russell. It's the same story. All right, here's interest rates. Here's a 10-year bond expressed as interest rates. That's not bullish. Neither's that. That's the bond. Here's the dollar up here at 106. Climbing all month long, along with the dollar yen. Evidently, the Bank of Japan intervened today. All right, so Bitcoin really broke down this month. Month of April, for sure. All right, there's Coinbase, kind of the same story with Coinbase. Same story with Coney. There's crude. Crude looks just like the rest of the markets. I mean, the shape of the market. There's FEPI's parent indicator, the Solfang index. There's an actual FANG index. Here's the CBOE VIX volatility index. Or this is VIVIX. This is the VIX of the VIX. That's a chart of FEPI. Real good ETF from Curve. Gold futures. Okay, so I think we got the idea on how the market looks. Let's go look at this now. Let's look at the buffer report. Okay. Let's start here with the indexes. Okay, blue is the benchmark. I've always wanted to do it that way. That makes more sense to me. Blue is the benchmark. So the high yield funds on the right. A little bit confusing at first, but I even put it up here in the title. Blue is the benchmark. So you can see here that most of the funds did what they're supposed to do, and that is because it was a bad month, and most of the funds provided a downside buffer. And that's pretty much what these funds are supposed to do, provide an income and provide a buffer. The income is the buffer. The income is how the buffer's created. Ideally, anyway, that's the idea. Okay, so, very few of the indexes up this month. Same thing with the single stocks. On the single stocks, the only ones that are up are Tesla, the single stock ETFs. I mean, the high yield ETFs, MRNY, PayPay, GUI, Flip, Goop, TSLP. All right. So let's go back here. All right, April showers bring May flowers. And some of these Bitcoin stocks sure have taken a bath, haven't they? All right, sell in May and go away. Well, it looks like some people front ran this whole, strategy this month. So just buy the dip. This pullback, is it buy the dip or is it start of something bigger? Those are always the questions. We already looked at the markets. We looked at the high yield funds and the buffer. So now the funds of the month and the single names. All right, I'm going to give the runner up to Tesla and TSLP. And PayPay is going to be the winner. And I almost gave it to Tesla. But let's look at this real quick. Okay, let's look how impressive this month was. PayPay outperformed. You know, they outperformed. You know, Tesla didn't do that. Well, TSLP did. TSLP could have made a strong contender for fund of the month. But this month I gave it to PayPay, which is, you know, of course, the PayPal high yield fund. Great month, guys. These guys just did super. They were up nearly 7% on the month, where PayPal itself was just up a little more than 4, about 4.5. Great job, guys. All right, and so now we're going to go to the index division of the fund of the month. All right, the runners up are THTA and Tress. Look at that. That's a big surprise. And what do you guys think the winner is? ETF of the month in the index category. IWMY. Would you look at that? Wow. Okay, so let's see what happened here. Okay. All right. Blue's the benchmark once again. If you look here, I mean, it was a pretty easy choice to pick IWMY. It stands out. You know, it stands out above the other ones. But I was really proud of these bond ones, THTA and also Tress. Now, these both outperformed their benchmark in a down month, and these things did what they're supposed to do, in my opinion. You know, THTA does a really wide iron condor type strategy where they sell deep out the money calls and put spreads, and to harvest a little bit of premium, and they do a good job. It's kind of a non-directional trade. It would also kind of do well in choppy and back and forth the markets that don't really go anywhere fast, which doesn't really describe this past market, but that's the advantage to THTA. They monetize volatility without leaning so heavily to the long side, like, say, the YieldMac does, where they monetize volatility, but they're also long at the same time through the covered call, which is a bullish strategy. The way THTA does it, it's more of a neutral strategy. Same thing with TRES. So TRES is a brilliant strategy, and it's a neutral strategy, monetizes volatility, and it's an interesting fund. I'm not saying go buy it or anything. Of course, I don't make picks, but it has a place for some investors. I'm going to do some more content on it soon. But in any event, let's go see here. All right. I'm going to have to give JEPY and Triple QY honorable mentions too. I wrote that here. Remember that. But look at this. Both of these guys also outperformed their benchmarks, and they were positive on the month. Both of them and JEPY were positive on the month when their parent assets were negative, and they outperformed and were positive when the parents were negative. Same thing with IWMY. It's been a hell of a month for those guys. All right, so let's finish this. Let's finish this up. All right, so yeah, definitely JEPY, Triple QY get honorable mentions. You know how I'm always saying that JP Morgan would do better in an up market, or any of the monthly strategies. I say these are built for, up markets. Why do I say that? Because they have less buffer. Okay. So the thing is, because the buffer hurts you in an up market, but it helps you in a down market. So to have less buffer is a good thing for up markets. So see, I'm not bullshitting. We can see it this month that because I'm also always saying Defiance will do better in a down market. That's the part I'm not bullshitting about. I'm trying not to bullshit about anything, but the Defiance doing better in a down market, that happened this month. And it's not, it's for a couple of reasons. The number one is because it's the only fund that uses the dailies. The monthly options are great. And I always say JEP-Y and JEP-Q are the gold standards. If you look at overall performance, total return, stability, if you had to put all your money in one fund, sure. But these Defiance funds have their place, and their place is for down markets because the daily, a lot of people think the daily options make these more dangerous, but they actually are what cause these to be less dangerous in down markets. And it's ironic, you wouldn't think so because it's a naked put. We don't have to get into it now, but what happens in the down market, volatility goes up. These guys sell options every day, so they get a daily reset and another bite at the apple. And yes, some days when the market's going down, they have some big losses, but the market doesn't go down every day. The market, even in bearish downturns, will have vicious bounce backs. And these guys are able to monetize those up days and any sideways days. So in any event, these, it really worked out where this was a good month for these funds. Everyone's saying, I wonder how they'll do in a bad, month. Well, we saw here, all right, so let's see what else we have here. Well, that's one other thing. And what else have I also said I wasn't bullshitting about? I've also said, premium collection will be higher. I said it's hard to prove because we've had compressed vol until lately. I said, but we're going to get a downturn and premium collection and dividends are going to go up. Well, what happened? I mean, JEPY went from 55 to 78. That's crazy. IWMY is paying $1.41. It's because the market turned down and volatility kicked up as a result. So, that promise or that prediction, was true also. I know these things because I've been doing this all my life. I was just trying to, but I can't prove it on the single day options. And there's no benchmarks and stuff. There's no benchmarks. And even though I know it because I've done it, I was having a hard time proving it. But I think the numbers are really bearing out what I'm always talking about. All right, so the single day, yes, it did its job. Its job is buffer, collecting income and buffering, and that's what it did. It paid out a ton of income, and it did a ton of buffering. So, like I always say, a monthly options are probably better be the better overall solution, better average return and stuff. But the way the monthly works is it is less efficient at catching premium. So it's less efficient at creating buffer. But because it's less efficient at creating buffer, it has better performance on the upside because you don't want buffer on the upside. It's ironic. All right. So let's look back to the buffer report one more time. And we're going to have to make a naughty list too. So let's look here. So on the naughty list, we're going to definitely want to put ULTY on the naughty list. And also, I hate to say it, but QDTE and XDTE. Someone's going to have to explain to me why these are constant underperformers. It's probably a simple explanation. It's probably like a wide bid-ask spread. So it always shows up on, my spreadsheet doesn't understand it. So it always shows up as an underperformer. But in actuality, it isn't. I mean, it could be something simple like that. I just don't follow that funds that much. I'm just not that concerned about weekly pay. Hey, does anyone here know the new Fidelity funds? I just did a review on them, but I cannot find anywhere in the prospectus or the summary prospectus, like on Discord, on a couple of Discords I'm on, I cannot find anywhere if they're going to be weekly. I mean, if they're going to be monthly payers or quarterly payers. I would think monthly, and somebody asked me a question and I want to give the answer, but I don't know. Anyway, leave it in the comments if you guys know. Anyway, we're definitely going to have a little naughty list, and ULTY, XDTE, QDTE, also YMAX. I hate to do it, but I mean YMAX and Maxi also let on the way down. I hate to put YMAX on the naughty list. It's a great ETF, but and FEPI as well too. But both of them, both of them let on the downside, and it is over a whole month, and that isn't ideal. So of course, though, this may go back to with FEPI. Forget about YMAX, but with FEPI is one that I'm always saying, boy, this one has a ton of upside. It's a high power. They use monthly options, and they do some other stuff, and just the way that one's constructed, I'm always saying, yeah, it's awesome. But if we ever have a tech crash, that one's going to be in the toilet. That FEPI's, because it doesn't have that much buffer either. So anyway, I think we may be seeing that. I think that's maybe what we saw this month, and maybe why it underperformed. Here's another reason too. I'm not saying to go buy or sell anything, of course, but also on FEPI, let's think about this. Okay, yes, it underperformed. We had a bad month, and it underperformed by 1/10 of a point or something. Okay, well, more times than not, we have good months, and in good months, there's lots of times it's outperforming by 2 or 3% or more. So I'm still saying FEPI's a great fund. It just, maybe not so much for a down, for a pullback. It's not going to have the type of performance that some of these other ones that have more buffer, will have. But it's still a good fund. I'm not talking trash on FEPI or YMAX or any of these or ULTY. It's just a fact. It's just that these funds have less buffer this month. So this report, I'm not saying these are the best overall ETFs. Hell, I don't know. I'm saying these with regards insofar as my buffer report goes. That's how I name the list. The list is based on the buffer, based on the top bufferers of the month, if you will. Okay, so we have our naughty list. It just was kind of a bad month for most risk assets, especially Bitcoin. And if you look, it really should surprise you that the ones that are doing well are the defensive ETFs, the ones that do the daily, because the daily has the huge buffer. So it's not a big surprise. It's actually what we would expect when we're having a pullback and we're also having elevated volatility. That's what you're going to get. You're going to get the dailies outperforming. Okay, so all right, so we have a naughty list for the other chart too. And we are going to put just Maxi's the only underperformer on the other chart. There it is right there. But let's switch charts. All right, so let's look at this one a little. We have a lot of good performance. Remember, blue's the benchmark. So we have tons of buffering going on. And, Misty, and even though Misty and Coney are down, they're buffering. They're doing a good job. Not so much on NVIDIA, but it's a good fund. Just didn't have a great April. And did not exhibit a lot of buffer for some reason. But luckily, Coney and Misty did. So, all right. So, yeah, on this one, the only one that's leading on the way down is Maxi. All right. ULTY was on the other list. Yeah. All of these other ones are, doing all right. And the ones that are, the honorable mentions was Tesla and Tesla. But I would also want to say Moderny or MRNY, Murny. PayPay, of course, PayPay won. But so Murny, Dewey, Tress, of course, we've already talked about Tress, Clip, and Goop are also up. So they all kind of get honorable mentions. All right. We'll do it again next month. Remember to always check everything say with your own financial planner, or everything anyone on the internet says, or anyone anywhere says. Your own planner knows your own circumstances, etc., and your own. Hopefully, I mean, if he's a good planner, he or she's a good planner, maybe. So watch for the buffer report. I do it 3 times a day with my quick 5-minute update that I started again recently. So first, I show where the market is and how much the funds are making or losing, and then we show the chart of the market, and then if there's time, we'll go to the buffer report. We'll look at this real quick. We'll usually look at the daily during the day, so it would be where's that old daily? I just had it. There it is. So this is just a 1-day change, and we'll look at that during the day and at the end of the day and see who was the big performers of the day. And the back, who performed and who underperformed on the day. So that was real good, wasn't it? This was what the daily looks like. All right, guys. All right, like I said, remember, check with your own planner. Keep an eye on the channel. We're going to have some more reviews coming up. Yeah, of course, these funds aren't perfect. They aren't for everybody. I've said before, 1 out of every 20 people maybe. And for those people, I think maybe 10 or 20%, maybe 30 at the most of your portfolio. These are cool and they do some cool things, but they aren't the answer to every problem. And really, what it comes down to a lot of time is the underlying. These funds are only as good as the underlying is in the grand scheme of things. Picking the underlying is probably the #1 most important thing to do. If you're like me and believe in a random market and an efficient market hypothesis, and you don't think that you have any special powers to pick the underlying, which I don't think, you stick with indexes. That's why I like indexes. But some of these single name stocks where they take some of the single names, slap them together like FEPI and YMAG and YMAX, those would be good. Those would be good as well. Those would be good as well. All right, guys. You guys have a great day, and I'll be back later on. I'll be back at lunch. How about that? With the noon update. It's going to be 5 minutes. It's going to be quick. Come check it out. All right. Later.